I just opened my portfolio and saw this one single fund in green. Any guesses?
Why is this Flexicap fund not falling when the entire market is falling like there is no tomorrow?
The only one fund that they should have in their portfolio.
What is even a Flexicap mutual fund? So this was a period between 2022 when the entire market was rallying, but Parag Parikh underperformed.
You know what is number one? Quant Flexicap Fund, which 30% CAGR. And then there is HDFC Flexicap Fund also, which is 24-25% CAGR.
Do you want 30% CAGR with huge volatility, or do you want 25% CAGR with lesser volatility?
Why did Parag Parikh actually outperform?
Fanboying throughout your life about your idol, then you go meet him, talk him, and on your way back home, you just met with an accident.
Can they keep doing what they're doing years and years and years ahead?
They took this high conviction call even when market was at a high.
That is how they've been performing really well. Technically, someone who's invested into this fund has exposure into large cap, mid cap, small cap, debt, and even US stocks. So it's making a 360 portfolio of sorts.
How I utilize Flexicap funds in my portfolio.
Nifty dipping below 22,000 for the week and slowly bouncing back. I know the US markets are still in the negative. The entire global scenario has now gone to bearish. Now that Nifty is trying to recover, I think it will be a fun week going ahead.
I know you said slow, but I don't think that was a slow movement. I mean, in 2-3 days, it just shot up like crazy. So yeah, markets have shot up, but I still feel even though the strength is looking great, the last 2-3 days candles are looking very promising. We just have to wait and watch. Like rightly Ajay said, something is happening in the US and China tensions. So if US starts to fall now, when we are about to recover, then it is only going to be a sell-on rise and we are going to fall more.
The market has been falling since September, and multiple times we have seen some sort of retracements and then larger falls coming. So I think a very large question in everyone's mind is this another retracement or is this a pullback? Very, very interesting times to be in, but yeah, that is what it is.
So along this entire journey, we have shared where we are personally investing, why you should be avoiding certain types of investments, and also we have looked into how the entire market narrative, indices like Nifty 50 itself changing by including Geofinance and Zomato into it. So between all of these discussions, a very common thing that came about is me personally, when I'm looking into my portfolio, seeing that Nifty is down by 15%, small caps are down by 25%. I just opened my portfolio and saw this one single fund in green. And I was so happy. I can't tell you guys how happy I was seeing that one single fund in green. Any guesses?
Yeah, because I also have it in my portfolio. That is also in green. And a super awesome, very famous, everyone's talking about the fund on social media, and it is nothing but Parag Parikh Flexicap Fund, right?
Yeah.
A magical fund of sorts, which is not falling. Even when Nifty is falling by 15%, I think Parag Parikh as a fund is only down by
7%.
Yeah.
So Nifty 15%, mid cap more than 20%, small cap even touched 25%.
Yeah.
Parag Parikh Flexicap, again, they have a lot of funds. They're a huge fund house. This specific fund fell by only 7%, and it was the best performing equity mutual fund in this time frame.
It has been like the go-to celebrated mutual fund, flexi fund, especially among everyone. You could see it on social media everywhere.
This is India's largest equity mutual fund, pure equity mutual fund by AUM. That is asset under management. So right now, as of today, it has an AUM of 86,000 crores, making it India's largest. I know there are other debt mutual funds, there are other hybrid or balance funds which are bigger than this. But as a single equity only mutual fund, they are the biggest and they have performed the best. All through the years, I've heard the story that the larger you become, the slower you are. Right? That's like the common philosophy that a lot of people view the world with.
And you're talking about an equity mutual fund. In the last 5 years, it has given 25% CAGR. And even in the recent fall, it has only fallen by 7% when the larger market has fallen by more than 20%.
Yeah.
So that is the kind of fund we are talking about. Great returns with low risk. So I think all the audience would be thinking about is, hey, isn't this a great investment opportunity? Is this that mutual fund that we should be investing into? So for that matter, I think in today's podcast, this is all what we should be talking about. Why is Parag Parikh so special? Why is this Flexicap fund not falling when the entire market is falling like there is no tomorrow? And then maybe we should even talk about what are these Flexicap funds even? Should people be investing into Flexicap mutual funds? And if they are considering which are the best Flexicap funds to invest in 2025 if not for Parag Parikh Flexicap Fund.
Yeah.
I think these are all what we should be discussing today.
I would also highlight inside this video a certain portion where we should discuss a dark period for Parag Parikh Flexicap Fund.
Definitely,
So this was a period between 2022 when the entire market was rallying, but Parag Parikh underperformed.
Yeah.
So we'll be discussing that as well. I think that's where we should introduce a host of the Aftermarket Podcast here today. The 16th episode of the Aftermarket Podcast. My name is Ajay Ajit. This is Nihal Bandapalli.
Hi.
And this is Sharique Shamsin, CEO and co-founder of MarketFeed.
Hi.
Before we get started, I think we have to quickly talk about how our MarketFeed automated trading strategies perform for this week. So,
Yeah, this week is special. I mean, we saw what happened to the market since we trade from a Friday to Thursday for the weekly expiry. Speaking about the weekly expiry, sad that NSE has come out with another circular, no surprises anymore, saying that NIFTY expiry, weekly expiry is going to change from Thursday to Monday. I mean,
For absolutely
I
no
mean,
reason.
yeah, if you think about it,
the legacy.
yeah. How do I put this? For me, it's not just for me, for the trading ecosystem.
Yeah.
Thursday, if you think about it, Thursday
Yes.
is NIFTY expiry.
Yeah.
I mean, that is what Thursday is. Thursday
You know,
is nothing but
your
weekly
week ends at Thursday was the kind of vibe we
Yeah.
were
So
in.
it defined Thursday,
Yeah.
and that changing does not sit well with me, and for a lot of other reasons. But yeah, that's that. I don't think no point in ranting about it, at least during this podcast. Maybe for another day. But anyways, that circular came out. My point being, so this from this Friday to Thursday, if you see, NIFTY moved down a lot, then it reversed,
Yeah.
it started moving up, and our strategies did very well. And
Yeah.
we're just very happy to see our strategies performing. Where when the market was moving down, we were only in call sells. Then when the market reversed, we exited the call sells and we got into put sells. And overall, the week we made slightly over 1% profit. That feels really nice.
I think especially in tough markets when we perform well, that's giving us a lot of validation
Absolutely.
and giving us a lot of confidence. And that's where I would like to say that we are linking a form down below where you can go check out our website, fill up the form if you're interested in starting our automated trading service, and hope that we'll see you all in the webinar that we'll be hosting when you fill up that form. So let's get back to our topics here.
Yeah, and very, very excited for this podcast where, again, viewers are going to get something really actionable, something that they could actively consider for their mutual fund portfolio. They could look into Flexicap funds as a category, add a fund if they do not have already, move out, like eliminate a bad fund if they have something which is bad already. So I think this podcast, I'm personally super excited because a lot of value, a lot of actionable insights gonna come out of this.
So I think we should start with what is even a Flexicap mutual fund, because this category or this name did not even exist before 2020. So it's a fairly new category, but already it has one of the highest AUMs and SIP inflows of the entire mutual fund schemes in India. So let's take the example of a large cap mutual fund. What are the rules there? SEBI has said that if a stock is coming under India's top 100 largest stocks, any mutual fund can decide to invest in it in whatever proportion that they decide to. Okay. Now, for a mid-cap fund, similarly, they have certain rules, right? So they can, or the majority of their money should be going into mid-cap funds. But in the case of flexi-cap funds, there are no rules at all. It is all free game. SEBI only says that 65% of the entire money that they collect should go into equities. Okay.
Irrespective of their market cap.
Irrespective of their market cap, it should go into equities. That means they can't hold, let's say, 40%, 50% gold or 30, 40, 50% debt. But they can hold 65 or more percentage of equity, and they can hold it in large cap, mid cap, small cap, micro cap, even if they want, right? They can diversify anywhere that they want.
In whatever proportion they want to.
Yeah.
For
Yeah.
example, if they feel that small cap stocks are now undervalued and there could be a small cap rally coming in, the 65% of the fund can only be in small caps as well if they want to.
That is how I think the rules are meant, and that is how they've been like performing really well.
So to simply put, what you're saying is just like large cap mutual funds, mid cap, small cap mutual funds, there is flexi cap mutual funds also as a category, and you explain the rule anyways. But then there is this very popular another mutual fund category or type, which is multi-cap mutual funds. So let's maybe also talk and give clarity on what is the difference between flexi-cap mutual funds and multi-cap mutual funds.
Before 2020, multi-cap funds were all the rage. And SEBI saw that a lot of people were interested in these kind of funds. And even the fund managers, they were also pushing for something different. So tell you about the multi-cap fund rules first. So SEBI says that if you're having a multi-cap mutual fund, you should be investing 75% of your total investments into only equity. After that, let's say out of your entire 100%, 25%, at least 25% should go into large cap, at least 25% should go into mid cap, and at least 25% should go into large cap.
Small cap.
Small cap. And the last 25% can go anywhere. They don't have any certain limitation.
Got it. So while as in FlexiCap, just like we discussed now, 65% can go into equity, but it can go into any equity irrespective of the market cap. So
Yes,
that's the difference.
there are no limitations by SEBI. Maybe fund houses will have rules of their own, but SEBI does not say, hey, don't invest there or invest at least 20% or 30% here. They do not say that. And that's the beauty of a flexi cap fund. It is someone who has the enough knowledge and enough confidence in what they're doing. They can perform better in a flexi cap environment. So we understood this one fund is performing really well.
Yeah.
Then we looked at the category. FlexiCap funds and understood that is also a really good concept. So let's quickly look over which are the other FlexiCap funds.
So I'll give you top 3. So one is Parag Parikh Flexicap that we already discussed is 24-25% CAGR in the last 5 years. But this is in number 2 position. You know what is number 1 is Quant Flexicap Fund,
Yes.
which 30% CAGR. And then there is HDFC Flexicap Fund also around Parag Parikh equivalent, which is 24-25% CAGR.
So just for giving context, Nihal, you had talked about the CAGR of all FlexiCap mutual funds in India.
Yeah.
Now, this FlexiCap category is compared against a benchmark which is called as NIFTY 500.
Yeah.
And NIFTY 500 has given a CAGR return of 17% over the last 5 years. Whereas you see the gap, right?
Yeah.
All the other mutual funds, actively managed mutual funds have given 24, 25, even 30%.
So that is outperforming benchmark by a lot.
While I want to talk some darker sides of what you said, before going there, I really want to re-emphasize on the fact that Quant FlexiCap Fund gave 30% CAGR in the last 5
Over
years.
5 years.
I mean,
Yeah.
that's no small feat at all. I mean, a fund giving 30% CAGR passively for a mutual fund investor. They had nothing to do, just put their money into this fund and they would have gotten this return. So amazing. But now I'll go into the darker side. While we celebrate or we make a big hype out of the fact that Quant FlexiCap Fund
Yeah.
gave 30% CAGR in 5 years, in the recent market fall, when Parag Parikh fund is down by only 7%, HDFC's fund is down by only under 15%,
Yeah.
Quant's fund is down by more than 20%. What, nearly 25-ish
Yeah,
percentage?
23, 24.
Yeah, so there is that con which comes along with the great returns that Quant's fund is giving. So while it gave great CAGR, when the market is falling, it falls more as well. So that's again something.
I think that is the reason why Parag Parikh Flexicap Fund has almost like 70-80,000 crores of AUM. This
Yeah.
Quant Fund has only some 7-8,000 crores of AUM because of this volatility and the volatile nature of that fund itself.
HDFC is still huge though. They have a considerable AUM. People are trusting the HDFC brand also. I think nearly 50,000 crores is what Indian investors have pumped into HDFC's FlexiCap fund.
Yeah, so these are times when I want us and people to think about not just returns, but also risk-adjusted returns.
Yeah.
So do you want 30% CAGR with huge volatility, or do you want 25% CAGR with lesser volatility? So I don't think there is a strict right or a wrong answer here. It's all highly subjective. It depends on who you are and what your risk appetite is and what you eventually want out of your portfolio.
Yeah, so I think this is where we should discuss why did Parag Parikh actually outperform. So we looked at all the funds. And Sharique, you only mentioned that Parag Parikh has fell by only 7% compared to all the other funds which have fallen by maybe even 3x more.
Yeah.
So what is so special in them that they have managed to showcase this performance? I think that's what everyone would like to know now.
So if you actually look into Parag Parikh's AMC's framework, investing framework, they follow something called as value investing framework. So they are very conservative people. They don't like to take so big risks. Say they have a very concentrated portfolio. They focus on stocks which are super valued, and they try to not have their portfolios at much higher risk. They try to keep it balanced and give a stable returns to the people.
Yeah, so Mr. Parag Parikh himself was also a fan or a student
Yeah.
of Warren Buffett,
Mm.
who is infamous or very famous for his value investing style. So even if you compare their portfolios, PE, price to earnings ratio, with other mutual fund portfolios, Parag Parikh always ranks on the top. That means they have a lower price to earnings.
Yeah.
So they, like you said, they always try to pick out the value stocks, the undervalued stocks.
Now that you're mentioning Mr. Parag Parikh and his guru, the legend Warren Buffett, there is an interesting, rather sad story that I'll have to put out here, which is back in 2015. Parag Parikh really wanted to attend the very famous Berkshire Hathaway's annual general meeting of sorts in Omaha, Nebraska, USA. And he went there, he attended the meeting, he met his guru, Warren Buffett, and on the way back to the airport, unfortunately, Mr. Parag Parikh met with an accident and we lost the legend, Mr. Parag Parikh then. So, yeah, I really wanted to mention it
Think
here.
about how unfortunate you fanboying throughout your life about your idol, then you go meet him, talk him, and on your way back home you just met with an accident. So very unfortunate.
Unfortunate situation. I would say India lost one of their gems. But fortunately, the fund house, based on his values, they've managed to still perform.
Yeah.
And that's one great story, right? So when you talk about any actively managed mutual funds, a question that will always come up, I think even towards the end of this discussion, it will come up is, can they sustain this performance that they're having?
Yeah.
Right? Can they keep doing what they're doing years and years and years ahead? And the fund actually showed that even without their founder, they were able to power through despite their difficulties. 10 years later, after the founder's death, they're still performing, or they're India's largest mutual fund equity scheme.
And another reason why they did not fall so much is very famously, because this was discussed a lot back in September, October, November, famously that when markets were at a high, really doing well, Parag Parikh took this high conviction call to move into cash.
Yeah.
They were holding on to a lot of cash. In October, or even in September, I think they were holding on to nearly 18% of their AUM was cash.
Yeah.
By December, I think slightly above 20% were cash and debt and all of those non-volatile instruments. So they took this high conviction call even when market was at a high, soaring high and moving up. They had this conviction and they chose to move away from equity into cash. I think calls like these are also making the fund special.
Yeah, and that is where all the market participants actually questioned their decision of, it's not a great thing to hold cash when the markets are in bull trend and uptrend. So, but they took that hard call.
Yeah, and even their exposure to the US market actually helped them. So after September, when our markets, India, started underperforming, that's when Donald Trump came into power and the US market started rallying and hit all-time highs. So Parag Parikh has a certain portion allocated to US equities.
Yeah.
They have shares in Meta, Microsoft, and all of the largest companies in the US. And because of this, again, while the rest of the Indian mutual fund space, they fell drastically, this certain fund, they were able to hold better.
Yeah, so technically someone who's invested into this fund has exposure into large cap, mid cap, small cap, debt, and even US stocks. So it's making a 360 portfolio of sorts.
So while we talk about this one fund and its amazing outperformance, I think we shouldn't discount the fact that all Flexicaps or Flexicap as a category itself is really interesting.
Yeah, it takes away your burden of, figuring it out, how much allocation should you put where, should you go into large cap, mid cap, small cap, based on the market conditions, where should you invest? You don't have to think so much. Just give your money to a good AMC like Parag Parikh or a HDFC or even a Quant for that matter, and just take a step back, relax, and let the fund managers do their job and give you amazing returns.
So I think for a normal investor who is just constructing their portfolio, they would have this doubt, right? Because they hear that, hey, your portfolio should have so much of equity. Even within equity, large cap funds should be the highest, then should be mid cap, then should be small cap. How should someone
and then they should modify that portfolio according to market conditions.
Yeah.
So given all this construction of portfolio, there is a question, where does Flexicap actually fit in?
So I think what is coming out is that if you're a beginner and you're slightly greedy, Right? You're greedy, you want the returns, you don't want so much risk, and you don't want to go through the headache of selecting your entire portfolio. You can, or they will be forced to consider a flexicap fund, right? But if they are slightly risk averse, that means they don't want to take as much risk. There are other options. There are the multi-asset allocation funds. There are balanced hybrid funds. So
Yeah.
all these will give you more safety, right? Will give you more downside protection. Flexicap is mostly equity. Let's deal with it.
Yeah.
And mostly preferred by people only because of the returns.
Yeah. And as your FlexiCap portfolio, as it grows organically, naturally with the market moving up, I think at a point or at a certain point, you have to think of other alternatives to FlexiCap funds also. Because if you look into the strategy or the methodology of how FlexiCaps are made, you clearly don't know when and where the allocation would go into. And the more your portfolio grows, you need more confidence onto where your money is growing. And that is where other options such as strategic indices funds or a fixed large cap or a mid cap or a small cap funds would come in.
Yeah.
Yeah.
So now for all viewers who are thinking, hey, we have heard that when we create or construct our portfolio, there has to be some element of gold, some element of debt, and then equity comes in with a larger proportion if you're young, right? So within that equity percentage of your portfolio that you have to construct, normal wisdom says that you have to have large cap funds, mid cap funds, small cap funds. So it is a normal doubt to have, hey, now where do I fit this flexi cap fund in?
Yeah.
So I think what I can do here is talk about how I utilize flexi cap funds in my portfolio, right? So what I do is, inside my equity holdings itself, I have a safe allocation place and then a slightly non-safe place which is for my higher returns.
Yeah.
So the safe is obviously large cap funds, so it's your Nifty 50 index funds or Nifty 50 value 20 index funds or large cap mutual funds for that matter. In your other proportion, and that proportion percentages depending on who you are, right?
Yeah.
So in that proportion, I normally have my mid cap and small cap funds. There is where I keep my flexi cap funds as well. Now, what it does there is it gives returns similar to a small cap or a mid cap fund, which is in the higher percents, but it is protecting me slightly from the downside if the fund is doing good.
Yeah.
I hope you get the point.
So yeah, that looks interesting, and I hope that people actually use that formula. But let's be real, most people just want one single fund to rule them all.
Yeah.
And that's how I believe this fund actually made it to an AUM of more than 80,000 crores.
Yeah.
Large cap funds don't boast this kind of AUM, right?
Great. Now that we understand flexi cap funds are really nice and can be not just a good to have in your portfolio, but a great to have in your portfolio.
Yep.
And also the fact that Parag Parikh Flexicap Funds is one of the best ones. Do you think that is the go-to fund in 2025, or should people be considering something else?
So if you believe that the market is going to recover quickly from here, the best fund to capitalize on it theoretically is quant mutual fund, because they're a momentum investor. So whenever the market outperforms, quant does really well, right? And that's how they've been able to generate such crazy alphas and make 30% CAGR over 5 years.
Yep.
So if you believe market is going to strongly bounce back very, very fast, quant could be the right place to go. But I'll tell you one of my logical deductions here. Let's quickly discuss over it. So right now what is happening? Parag Parikh, this particular fund is sitting with a cash reserve of more than 20%. And they are also able to understand and identify a lot of value picks in the market right now because the market has fallen. So this is like, if you think about it, this is their playground, right?
Yeah.
Their home ground. They're meant to thrive in this kind of scenario. They have the cash ready. They have the stocks which are available at really good valuations. And also the third major factor that I feel is going to come in here is that they do not have any redemption pressure.
Yeah.
So all other mutual funds, if they're underperforming, let's be real, everyone will start panicking. They'll either stop pumping in more money or they'll start withdrawing money. But when you are the best fund in India, will people start withdrawing from you? There is very, very less probability. So with that liquidity advantage also, I think Parag Parikh is one really good fund to consider for the next 6 to 12 months.
And then there is HDFC's Flexicap
Yeah.
Fund, which has been, again, always there in the picture. No one's talking about it. No one's hyping it up or glorifying it. But they are also there silently sitting right at the center, right? I mean, they did not fall as much as a quant Flexicap Fund. At the same time, it performed as well as the Parag Parikh Flexicap Fund. So I think HDFC's fund is also very rightly in the mix of the scenario.
Yeah. And when I say you have to consider, it is not an investment advice. We are not SEBI registered advisors. And just for disclosure here, I personally have both these funds in my portfolio. And I believe even Sharique
Yeah, I'll
has
also
both.
disclose that. I've also been, for multiple previous years, I've also been investing into both these funds.
And that's a real trigger for this podcast topic, right? So we opened our portfolios last week to show you guys where we are investing. And we looked into our entire portfolio and saw that quant has fallen by so much. And I was like, okay, prepared. Market is down. This is how the market is. Prepared to understand that. But this other fund, this special fund, as we started off with, has not fallen so much. And this was the entire trigger. Us looking into our own portfolios, seeing the major difference, us looking at the worst performing mutual fund in India and the best performing one, and taking the call, hey, a lot more people should understand more about this.
Yeah. I also remember back in the day in multiple YouTube videos and lives, me mentioning about my mutual fund portfolio. And depending on when the video was, depending whether I was investing into either a Parag Parikh Flexicap Fund or Quant Flexicap Fund, I have been talking about the same on YouTube as well. But anyways, now that we here on the Aftermarket Podcast have been talking a lot about strategy index mutual funds, I think that's also a relevant point, right? I mean, while we are hyping up Flexicap funds a lot, are there equivalents in the world of strategy index funds is something that I think we should discuss about, right? So that's again, with their tricky names, there are some strategy indices which have good index funds which are comparable slightly even to Flexicap funds, not entirely but slightly, because these are strategy indices which can hold different market caps, large cap, mid cap, small cap companies in any proportions, not in any fixed proportions. That's what ideally, essentially, Flexicap fund is also doing, right? So again, names are tricky. The names here are Nifty 500 Momentum 50 and Nifty 500 Multi-Factor MQVLV 50. MQVLV 50 is nothing but Momentum, Quality, Value, Low Volatility 50. So again, going back to what strategy indices are, I mean, we should put up the video here, the link to the video here. So these are the factors for which this strategy is optimized for. So again, Nifty, both these funds, I'm not repeating the names, both these strategy index funds have also given a 5-year CAGR returns in the tunes of 22 to 24%, which rightly puts them at par with Parag Parikh's and HDFC's fund.
Yeah.
The only problem is, in the recent market fall, these funds have fallen how the Quant's fund fell, which is in the ranges of 20 to 25.
So I think that's going to be one of the major factors. You'll have to consider your strategy index investments as pure equity. They can't have a debt portion. Unlike certain mutual funds, which can play around with investing into debt if they feel that the market is overheated. So that makes sense. I think if you're investing into a strategy index fund, you should be having a separate debt portfolio made of your own.
Absolutely. So the moment you get into strategy index investing or index investing for that matter, there is a lot on you to rebalance the portfolio in itself to ensure that you have a good, smooth sailing for your portfolio.
Yeah, and that is where, like I mentioned earlier, once your portfolio grows, you should take accountability of yourself. You would already know a few things, how to balance stuff and all, and that is where you should try to be more active in the index fund investing, strategic index funds, because that is again going back to the same point, giving you more clarity where your money is going and not dependent on a fund manager. Because tomorrow maybe a fund manager could change from Parag Parikh Flexicap or even Quant. You know, it all depends on the expertise lies in the fund manager. So if that fund manager is changed, our whole entire portfolio takes a hit. And probably once you're growing big, you don't want that to happen. So that is where you can incline towards strategic index funds.
Yeah. So I would like to wrap up this entire segment by discussing two major disadvantages, especially with Parag Parikh Flexicap, but also for the larger Flexicap or mutual fund industry, we can discuss this. So the first one is the over-reliance on the fund manager and the actively mutual fund space having a lot of mental pressure, right? So as you rightly said, whenever the AUM of a fund increases, there is always a added pressure on the fund manager. Then the fund manager could change. The past performance could lead up with a lot of new investments into your fund, which means that your AUM suddenly explodes and you don't have a lot of stocks to pick. So these are all problems with the active mutual fund space. And as Sharique said, the passive mutual fund space with strategy indices, they don't have all of these problems. They don't have the mental pressures. It's purely based on rules.
Yeah.
So I think that's one interesting factor that you should note here. And the second one is the US investing component. So when we talked about this particular fund outperforming, what was so special about them? We said that they have a lot of investments into the US market. And that is where I would like to discuss about the dark period of Parag Parikh Flexicap's history. So if you look at 2022, the entire Indian market was performing really well. But Parag Parikh was underperforming. There were lots of videos. I can't say even the number of videos where everyone was comparing or saying, what is wrong with this fund?
Yeah.
Do you remember that?
Yeah, I remember that was a time when the US market was underperforming so much, and that created a dent in Parag Parikh's performance, and everyone was bashing, thrashing Parag Parikh.
Yeah. So what is now an advantage was once a disadvantage for the fund. That's their dark history that I would like to highlight. And also the fact that due to a lot of restrictions from RBI, not even this fund or any other fund, they can't start investing heavily into the US market. So Parag Parikh has the advantage that they're already invested. That is the only advantage. They can't increase their exposure because there are certain RBI rules and limitations saying that no more Indian mutual funds can go ahead and invest overseas.
Yeah,
And that is going to be a problem.
Yeah, and that is where even in the social media, the narrative is coming up. The AMC is again growing till almost 1 lakh crore AM touch mark, and probably they might not replicate what they've been doing, and they might not deliver returns. Again, the restriction with the US investments, and so that is looking little uncertain. But I think only time will play out if they can redo their charm and give us the returns that they have been giving throughout.
So I think a lot of value being shared in this episode here. A new tool that you can add into your arsenal, which can maybe supercharge your returns if you use it the right way. And for the right person, this could be the right tool. And that is all up to you to decide whether you want to start looking into this new instrument or this interesting instrument, which is Flexicap mutual funds. And that's where let's wrap up. This is Ajay signing off. See you all again next week. Bye-bye.
Bye.
Bye.